All right. Well, thank you very much for joining. Sorry, everybody. Sometimes I get to struggle with this Zoom thing. It keeps going back and forth. So bear with me if I'm struggling with everything. All right. My name is Jagede. Let me see. I will have to mute everybody. Let me see how to do that before I start. Uh, Sorry, bear with me. Let me try and see if I can mute everybody right before starting. All right. All right, cool. I think I was able to figure that out. Cool. All right, thank you very much. Can you all hear me? Just signify if you can hear me. All right, cool, awesome. All right, my name is Jagede. Thanks for joining. It's another beautiful Saturday. Good morning, good afternoon, good evening. I'm pretty sure there's no good night. I'm really excited for today. Jay is here. My heart was skipping a bit. Like, is Jay gonna join? But Jay, good to see you. I'm seeing a lot of faces. My wife is here, my co-partner. I see Shola, I see Kunle, I see, okay, that's my wife waving. Casey, Chibundu, Diola, OPP, my brother, Kende, Israel, Gloria, Niya and Funto. A lot of people. I see my sister, Auntie Gloria, OPP, what's it called? Tosia, I know. Everybody, Oscar and the likes, Emeka. Thank you very much, Otumba. It's good to be here. The whole purpose is for us to learn, to educate ourselves. Aburo Yinka, good to see you. And I always like to start, with a knowledge sharing when we start. And if you can see what the front page is, my wife designed that, and it talks about you can't learn to swim by reading it in a book. I'm sure most of us have read books a lot. You don't learn to swim by reading it. You definitely have to jump in the water. And that is what we are trying to do. That is what real estate investing is about. But today's topic is actually going to be shedding more light on how we can get loans. We have an expert that is into buying homes, either your first home, your second home, your third home, and the like. So he's going to do justice to that. All right. How many of us have seen the movie, The Founder? If you have seen the movie, The Founder, if I can see your faces, that would be great. Some of my friends are here. Let me see your faces if you can. It will be nice. That's good. Sheol, good to see you. David, good to see you. Sonia, I can see Sandra. So if you can see your face, that would be nice. Otumba, happy birthday. Good to see you. How many of us have seen the movie The Founder? If you have seen the movie The Founder, just say, wave your hand, or you can put it in the chat section. Good. Most of us, we drive through McDonald's. Okay, my brother, good to see you. We drive through McDonald's. I saw this movie, I think it came out in 2016. And, I really want us to check it out. Now, if I'm going to send you the link. It's like a minute clip. I'm going to send the link to the chat. When I send the link to the chat, go click it, check it out. Now, it's going to mess up my presentation, but we'll figure it out later. What I'm trying to let you understand is the importance of real estate. And, owning all the, when McDonald's started, I'm sure most of us, if you know the story, Ray Kroc, this was the best decision he ever took for McDonald's. So let me send the link to the chat and click it, watch it, then we'll now come back, to the meeting. It's just a minute clip. So check out the link, everybody. I just want to impart that knowledge in us. Then let's come back, into the meeting. All right, go check it out. Just 1 minute. If you're just joining us, click the link in the chat and go watch the YouTube video. It's just a minute. All right. If you have finished watching it, just say hi, or let's say okay in the chat group. And if I may ask, can anybody confirm with me? Can you see my chat? Can you see my chat window, my home personal chat? Can you see my chat in the presentation? Anybody there to confirm for me? Babe, can you see my chat? You can see my chat.
Yeah.
Yes,
I don't want
yes,
to see,
we can see.
I don't want to see my chat. That's the only thing. All right, cool. Well, if you have seen the video, awesome. You know, if you are still figuring it out, good. You know, that was just a snippet. If you have time after today or tomorrow, or whenever, the movie is on Netflix. Go check it out. It talks a lot about how franchise actually, you know, started majorly in the US. You know, Ray Kroc wasn't the one that actually started McDonald's, but he was the one that is credited, you know, with what McDonald's is today. And owning all the, you know, owning the land and leasing that land to the people is actually a business. If you look at Walmart, if you look at, you know, Target, all of them, they own the land where they build those buildings, where they build all these stores that we all go to. So check out the founder. All right, moving forward. Your network is your net worth. I'm not sure if my real estate mentor is here today. I actually went on a real estate date. I've never had a real estate date before. I went on a real estate date. Me, my mentor, for Sonia, and my wife, and you know, we went to talk about stuff. It's very important, you know, for your network to people you move in your circle. They are the ones that will determine how far you go in life. So let's meet you. You know, let's meet everybody. Just drop a comment there. Let me see. Tell us your first name, your city, and the state you are. If you're in Nigeria, just tell me like Dayo, Lagos, Nigeria, OPP, my neighbor, 30052. You know, Okwe, Boston, Massachusetts. Tell us where you are. Let's get to meet you before we move forward. I want to make sure that, you know, I keep my network strong. Okay, KC is from Lagos, Nigeria. Shell Sonny, Series, California. Who else is there? Who else is there? Let's get to meet you. You know, drop your, let us, you know, Kenny, Illinois, good to meet you. Jay from Fly Branch, Olamide, Calgary, Tolu Gungbe. Tolu, good to see you from India. Okpeyemi, Boston, Massachusetts. Every time my younger brother wants to type, he always puts his own name in bracket because my wife gets the same name. Sandra, ATL all the way. Tokpe Sonny from Series. I have Ayo from Virginia. We have Israel.
Sorry.
All right. It's good to have everybody here. David from Ottawa. You know, I'm excited to see everybody. Send a message to the, you know, to everyone. Let's get to meet you. Olaiwola from Lagos, Yemi, Atlanta. All right. These are the people that you get to meet. The more we get to meet each other, the more we get to form that bond, the more we get to network together. All right. Let's move forward. I really want us to make sure that we give Jay enough time to do justice to the topic. I have my own questions, Jay, even though, you know, I've actually a ton. I wrote like almost a page down. I don't know if you can see my book. No, not the open space. I wrote a lot, the closed space, not the open one. All right, but before we go into that, the real estate financing is our agenda for today, and Jay is going to do justice to that. But before we go, I figured something out. Let me try and do it. I want to launch a pool. Can you see my pool? Can you see my pool? Just with your hand. All right, cool. So tell me, if you know the answer, what is a FHA loan? What is a FHA loan? It's going to be done in, I'll probably take it off in 40 seconds. What is a FHA loan? All right, let me grab my pen. Sorry. You know what? I'm just going to run all the pool at once so that I'll give Jay enough time. All right, I'm going to stop on the, let me see. Okay, we have just making 1 minute. If you know what, don't Google it. I can see you Google it. You know, I can see you from here. Do not Google. All right, do not Google. You cannot even change your answer. I don't think you can change your answer. All right, cool. I'm going to end that pool. FHA, did you see that? So 25% said first home acquisition loan. 2% said federal home acquisition loan, 13% said federal housing administration loan, and 0% said first housing administration loan. All right, Jay, it looks like you have a lot of work to do today, right? FHA is federal housing administration loan, and that is 13 people, that's 65%. I think most of us actually did great, so that was really good. All right, I think we have another pool. I just thought we might have a little bit of, let me see. Okay, let me see. How about this other one? A VA loan. Some of us, we know what a VA loan. Sonia, don't answer the question. That's a cheat for you. All right, a VA loan will most likely be used by who? If you are from Virginia, you will know what a VA loan is. I'm pretty sure. What is a VA loan? Let's end it in 30 seconds or thereabouts because of time. All right. It looks like a lot of people are doing great with the VA loan. Wow, interesting. All right. I'm going to end the pool on the 40 seconds mark because of time. All right, cool. A VA loan is a veteran or active duty member of the U.S. military. That is correct. 85% answered that. Someone said Virginia. Don't always listen to me, please. That is not correct. A home buyer with an actual or usually low credit. All right. I think we have one more. So let me see. What is the lowest possible down payment on an FHA loan? I'm trying to set the stage for Jay. So Jay knows he has a lot of work to do. What is the lowest possible down payment on an FHA loan? Our first property was an FHA loan, so I'm pretty sure I'll get the answer. But I can't answer myself. All right, is it 10%, 2%, 20%, 3.5%? All right. There's one more pool. I'll leave that one at the end, or maybe we might not even get to it. But I think these three is good enough for us in interest of time. I'm going to stop at the 40 so we can move forward. All right, cool. The lowest possible down payment for an FHA loan is actually 3.5%. 71% of us got it right. So that is good. So I think we are actually, most of us, we are close to, what we're going to be talking about today. So that is good. All right, so back to it. Our agenda is real estate financing. And today I have with me, where is my cursor? Jay Millwood. The first time I met Jay, Sandra introduced Jay to me. Remember I told you your network is your network is your network. We had a loan we were trying to process for our current property, and we were having some issues. And Sandra said, I know a guy is a miracle worker. I'm not equating Jay to Jesus, don't worry. But he said Jay does wonders. And in 7 days, what was going to take other people 45 days, trust me, Jay closed our loan. Jay brought a champagne. We had a great time. Sandra brought a champagne, and we moved into our home. So every time I see Jay, I text her, I say, "Hey, miracle worker, how you doing, sir?" So let me introduce you to Jay.
Yes, sir.
Jay is the branch manager of Homestar Financial Corporation. He has 25 years in real estate experience and mortgage industry. Jay is more of a friend to me now because I've been able to, relate and communicate with him, even asking questions when he doesn't even have to answer me, or when I'm actually dealing with another mortgage lender. His experience in conventional FHA, VA, USDA, jumbo, and 203K loan. So I'm going to hand it over to Jay. And Jay, please, let's be on mute. Put all your questions together. At the end of the section, I think Jay will have another 45 minutes or thereabouts to talk. Then you can ask all your questions. Jay is available for us. So without further ado, Joe Millwood, thanks for being with us today. You can take over.
Thank you so much, Dio. I love this. This is awesome. And thank you so much, Sandra, for connecting Dio and me together. Sandra is a wonderful agent that handles things just like she is a professional. And Dio and I are definitely good friends because of real estate transactions. And I am so thankful to be here with you guys today. I'm excited. One of the reasons that I'm excited is because I love talking about mortgages. I mean, part of my counseling sessions that me and my wife go to is for her to explain to the counselor that she would like to talk about something else other than mortgage stuff, other than real estate. So, so regardless, you have me here in front of you. I humbly offer to you that I have a world's worth of information. I often say I don't know everything, but I do know a lot. And so, and again, I say that humbly. I recognize the blessings that I have, and I love being a blessing to others. If you know Dio, you can ask him, and he will confirm that I love blessing other people in any way that I can. And this expertise that I've my entire life I have spent in some type of real estate. And what I mean by that is even when I was from the time I was born. Well, I'm sorry. Let me start. Yeah, from the time when I was born, my mother was a real estate agent, became a real estate broker before I was in kindergarten. And my father developed his first piece of commercial real estate by the time I was 5 years old. And throughout my father's entire career, when he passed away in 2016, I gave his eulogy, and we were adding up all of the properties that he had owned. My father owned over 73 properties within his 72 years of life here on this earth. My mother has closed, I believe, close to 500 transactions in her career. So that was where I was before I even obtained a real estate license to be a realtor in 1996. And in 1991, sorry about that. 1991, I got my real estate license. For 5 years, I was an agent. In 1996, 96, became a loan officer. And it's been an amazing, wonderful career. I say all of that to share with you that I love this stuff. I eat, breathe, sleep real estate, and specifically mortgages. So let's dive into this thing. I'm going to briefly go over some of the, if you want to pop that next one up, Dio, that would be great. Oh, my wife, I'm sorry. One more time back. So sorry, Dio, one more time back. My wife helps me administer the Facebook group that I have. And so if you would, please feel free to check us out on Facebook. We have periodically we'll put out some different information there. You can see and leave some reviews, and then my website down at the bottom. I've also in the chat box at the very top. I will repost again before we leave my information for that. So check us out on Facebook. Feel free to reach out to me. Thank you, Dio. Now we go to the next one. Okay, so for FHA loans, that is the most widely used home loan for folks that are, of course, first-time home buyers. In general, for my book of business, for my colleagues' book of business, it will range anywhere from 60 to 70% of all mortgages that we do. So it is without a doubt the strongest or the most widely used type of loan, generally speaking. And especially for those of us that that want to own our first home, or just want to get into a home with the widest net. So essentially, what we're looking for right now in FHA loans, we recently were the market, the overall general real estate mortgage market has opened up to begin working again with 580 credit scores. So to buy a home, you can have as little as a 580 credit score. I personally have, I close loans that are 580. I actually closed a loan that was a 582 score, and the person had outstanding car repossessions. So it's a strong loan. It doesn't work for everyone that has a 580 score and a car repossession. But what I mean, well, the reason I say that is because it is possible. And so with the net very, very wide, FHA loans helps so many people. With the FHA loan, we also can combine it with down payment assistance programs. We can combine down payment assistance programs with other loan types. FHA mortgage just has a more combinations that can work with that. Specifically, Georgia Dream. If you have another window, or if you want to jot that down, you can research that. If you don't already own a home, or if you haven't owned a home in the last 3 years, you can use Georgia Dream. And very recently, they have increased the assistance dollar amounts. So that's very beneficial. They've also increased the maximum sales price all the way up to $325,000 as well. So that's very beneficial. So we can use down payment assistance programs with FHA, but to focus just on an FHA loan without the combination of the assistance programs at this time, 580 to 620 makes it possible. Makes it possible to get a loan. Well, actually, I should say from 580 to 639, it's possible to get a loan. 640 plus makes it a lot more doable. And then a 660 plus with an FHA loan, it's more or less a slam dunk. Okay, so that's, as far as credit scores go, that's where we're trying to land with the FHA loans. I'm checking my time so I can stay on target with this thing. Credit scores are very important to buying a home. When you have a higher credit score, there can be more negative things on the credit history that the scores will overcome. So I think since I'm talking about this, I want to go ahead and give these 2 points. Dio, let me ask you a question real quick. Do you feel like that there are as many people on this Zoom call that need assistance with first-time home buying, or do you feel like we're looking around mostly real estate investment?
Well, I think for this call, actually, most of the people here, I have a few friends that are looking, to first-time home buying, and they want to learn more about it.
Okay.
While also I have some friends that want to know about real estate investment, I really wanted us to dive deep first into first-time home buying. What is a VA loan, conventional mortgage, which is also going to help for second-time home buyers. So I think we're going to have another topic probably next month about real estate investment, financing, and non-conventional real estate investing. So, but for now, we want to focus into home buying for people, either here, and I have some folks in Nigeria, folks in Canada. So you might probably get some questions about the conventional or other ways to, buy property. So expect that.
Okay.
All right.
Very good. Thank you, sir. Thank you, sir. Okay. So, what I want to do is give some very brief information that I have learned throughout my experience with my clients. When we have a credit score that is around a 580, 590, if you have a score around 580, 590, then you want to make sure you obtain 2 credit cards. You want to have 2 revolving accounts, which is also known as a credit card account, and 2 active credit cards with very small balances is the fastest way to improve the scores without hiring a score improvement company. I have a couple of references that I can help if someone wants to do it even faster and is willing and has the capacity financially to pay that if your scores are lower. So please keep that part in mind as well. You may want to jot down those notes if your credit score is something that you want to work to improve. Let's go with the first level of improving a credit score is make reporting. What that looks like in the real world is getting 2 credit cards, putting 2 tanks of gas, one or 2 tanks of gas on the card, then put the card away and make the minimum payment, it goes to 0. And then once again, practice the 1 or 2 tanks of gas as well. Okay, so just to give you guys, that's a quick, fast, the quickest way to rapidly improve a credit score if you don't have 2 credit cards with small balances. Now, I will quickly get into, so the FHA loan, sometimes realtors and home sellers are concerned about receiving an FHA loan, an FHA buyer and as a contract, because sometimes FHA's requirements on the properties can be a little more stringent. And what I mean by that is that there are a few more components of the home that have to be functioning properly than with a conventional mortgage. So that sometimes will have a home seller / listing real estate agent want to receive conventional mortgage offers. So keep that in mind that, if the FHA loan, if you hear some speak or if your real estate agent, Sandra, says to you, these home sellers are we're probably not going to work unless it's a conventional mortgage. Sometimes that happens. With that being said, I do many loans in today's market. And when I say today's market, today's real estate market is weird. I've never experienced anything like this in my 25-year experience. I'll get a little bit more into that in just a little bit. So FHA loans, they can work. They do work. They are strong. We get loans closed with FHA within 30 days or less. So if you want to buy a house and you haven't owned a home before, or if you haven't owned one, really, actually, even if you currently own a home and you're going to sell, you can still use FHA mortgage to buy your new home with. Okay, so FHA, when I run it through an automated underwriting system, if you're taking notes, might as well jot this stuff down. I will use an automated underwriting system for what I'm looking for as an approval through the desktop underwriter. Fannie Mae's version is the desktop underwriter. Freddie Mac's version is the loan prospector. That'll be the last tab that we work on. So desktop underwriter will give me an approval. That approval can allow us, meaning me and my clients, to have a debt to income ratio as high as 55%. I'm not real sure why it allows to go that high, but it does. So up to 55% total debts, which is the new housing expense that we're looking at, plus all the other debts that we add together monthly, can be up to 55% of the gross taxable income, the qualifying income. So that is strong, very strong. In the conventional world, it's limited to we can go up to 50%, but that requires like a minimum of like a 10%, 20% down payment plus a 740 credit score. Okay, so to go to 50% with a conventional loan is very, very rare. To go to 45% happens, but that's the most, 45% in the conventional loan. So to maximize buying power, we're going to land with the FHA loan. So FHA loan, 3.5% minimum down payment. Let's talk about, while we're talking about this real quick, I want to go ahead and lump in total cash to close is different than the minimum required down payment. I'm going to say it one more time because this is very, very important when it comes to a real estate transaction. And, you know, this thing that Dio is putting together that's so beneficial about being involved in, you know, owning real estate. I want to help you with step by step. Number one, you get pre-qualified for the loan. Pre-qualified means, for example, I would receive income well, actually, I would have a conversation on the phone about what I feel like we're headed towards with qualifying income. And then we pull a credit report, we mix in the debts and get the debt to income ratio, and we get you pre-qualified for a home loan. Okay, once you get pre-qualified for a home loan, then Sandra would help you go find the house and get it under contract. Typically, you're going to close and own the home 30 days after that contract happens. And so when you get ready to close, the cash to close is the number that you need, the amount of money that you need to know you're going to be spending. So when we say 3.5% down payment, that's only a portion of what gets made up in the total cash to close. Very, very important. If a person buys let's go with a $200,000 home, for example, and the 3.5% down payment is $7,000, that's the down payment portion. The total cash to close is going to include closing costs, attorney's fees, appraisal fee, doc prep, underwriting, transfer tax fees, attorney's titles. I think I already said that. So all of those things are closing costs. In addition to the closing costs, there are what we in the industry call prepaid items, which is like the first year's homeowner's insurance, and then 3 to 4 months extra for taxes and insurance to set up the escrow account, which then, so we fund the escrow account at the closing day so that when the tax bill and the insurance bill comes due annually, there's money set aside and that's budgeted for the house, the total house payment. Okay, so I say all of that to say, I feel I'm a preacher. I said all of that to say this. If it costs $7,000 down payment, and then it costs $3,000 for prepaids, and then it costs, I'm going to round it up, $5,000 for closing costs. You got 5 plus 3 is 8,000 plus 7. There's a total of $15,000 needed to close. When your real estate agent helps you negotiate the transaction, today's market is a little different cost for you. So if total cash to close is $15,000, perhaps you can can negotiate with the seller to pay $5,000, so that now your total cash to close is $10,000. That's still more than 7. So that's where I'm getting towards. Please keep in mind, I just want to share with you guys, cash to close is a little bit different than just the down payment. Alrighty. So, Dio, I think I'm going to do a quick check-in with you before I delve into the conventional mortgages. Do you feel like there's anything that I did not clearly, or that I might want to lean more into at this time?
Thanks, Jay. Yeah, I think actually explain the FHA. It might probably be a bit technical too much. I hope people are taking notes. So I'll probably want you to run through the other one. Then when they ask questions, it actually makes it much easier to understand. You know, when someone asks a question, then the question will make you probably dive more deeper into, what they really want to know, instead of getting too technical into it. So we can run through all the other types of loans.
Gotcha. All right, here we go. So that's FHA stuff. Conventional loan. I noticed that one of our polling questions was minimum down payment for FHA loan. It's not going to be a polling question or anything like that, but I'll share with you that many folks that I speak with assume that a conventional mortgage requires a 20% down payment. A conventional mortgage does not require a minimum of a 20% down payment. A 20% down payment will alleviate PMI, or private mortgage insurance. So you can do, I close all the time, a conventional mortgage with only 3% down payment. So that's a possibility. It's a little bit cheaper than FHA when the debt to income ratios are low enough and the credit scores are high enough. All righty. So conventional mortgage, great loan program. I'm doing more and more conventional loans as this market progresses. Let's dive in. Is that pretty good, Dio? Now we'll go to VA.
Sure.
Okay. All right. So VA loan, love it. It's without a doubt the strongest loan. You get 100% financing with no monthly mortgage insurance at all. If you go to FHA loan, you got a minimum of 3.5% down payment. You got to pay upfront mortgage insurance plus monthly mortgage insurance. So they get you coming and going. With a conventional mortgage, you pay PMI if you put less than 20% down. With a VA loan, if a person is a veteran, active or honorably discharged for the correct amount of time, which I think is like a minimum of 36 months of full active duty, we're going to do 100% financing with no monthly mortgage insurance. And for every veteran that is receiving 10% or more disability, so if you're a veteran, you have an idea of what I'm speaking of. If you receive 10% or more disability, there's not even any funding fee. So it's the best. It's the best loan that when a person is eligible for it and has credit scores high enough for it, which right now can be as low as 580, but to get the loan approved, a little more difficult with those lower scores. So now let's jump into the 203K loan. This is an interesting cap. If you are taking notes and you want to buy a property or get in the 203K, let me go ahead and jump to the USDA loan real quick. So the USDA loan is 100% financing, and the VA loan is also known as a rural development loan. Rural development loan for us in the residential world means just that the outlying areas, the concept is that the outlying areas, not in the metro areas. So outlying areas from the Atlanta market, what I'm talking about is reaching as far up as Barrow County, Jackson County. In Atlanta, you got to get down to like Fayette County, things like that. So a little more rural areas, but it's 100% financing. And it is it's the second best. So in my opinion, when it comes to what loan programs do we go through, number one, are you a veteran? If you are, I want to help you with a VA loan. Number two, if you think you might want to buy a house in a rural area, 100% financing. You still have monthly mortgage insurance plus a funding fee, but it's still a phenomenal deal, 100% financing. Now I want to talk about the jumbo loan a little bit. Jumbo loan means a loan amount that exceeds the loan limit, and for specifically right now for the conventional loan. So the conventional maximum loan limit in the metro Atlanta area is, I believe, $521,000. It might be 505. I'll look it up every time I have to. So anytime you want to borrow more than that in one loan, then we're going to use a jumbo loan. They're more expensive. They're more difficult to qualify for, and larger down payments are required. Commercial loans, you're going to work with a local commercial banker. Typically for the commercial loans, there are also numerous commercial loan brokers. You definitely want to do your homework. If you walk into a bank and you can get a commercial loan, you should be fine. The standard fees are probably going to be all right. They are very expensive. Commercial loans, for example, residential appraisal is typically maxes out at about $650, $750 if you're talking about a $500,000 house. Typically, it's about $450 to $500 for a residential appraisal. On a commercial loan, I haven't seen a commercial appraisal less than $2,500. I have seen commercial appraisals for small strip malls, for example, cost $5,000. So commercial loans, fees are more expensive, rates are more expensive, but it is without a doubt, it can be the biggest bang for your buck once you can reach that level. So, so now I'm going to jump back up into the top right-hand corner, 203K loans. Spectacular loan program, and you want to avoid at all costs.
For a quarter mile, turn right on Washington 96 in Seattle.
Take it right. All right. So, anyways, I don't know if you guys heard that. Okay. Just don't turn into the pond. Okay. Yeah. So, okay. So 203K loans. That's what we're going to call a purchase / renovation. We're going to do one loan that buys the house and does renovations. Typically, the renovations are going to be, you want them to be focused initially on items that like the systems aren't functioning properly. Okay. So the best terms that I can put this in for you is 203K loan, you want to buy a house, the HVAC may not function properly, but you want to buy the house. It's in the perfect location. And so we can do a 203K loan that buys the house with, and you get financing for the HVAC to be repaired after closing. So it's a really good thing. We also do have some other things called escrow repair that I prefer to use instead of the 203K loan, but you got a lot of options. So if you see a property that you want to be in and it's not exactly just right as far as like some of the cosmetics, or if the systems aren't functioning properly, to advance in a 203K loan, you cannot, you can, but you're probably not going to get the loan close. You can't change the footprint of the home. You can't change the structural components of the home. However, you can do quite a bit with a 203K loan. So if you happen to get into a home, maybe all the other homes around it are worth $300,000 to $400,000, and this home is in disrepair. And with, if you can buy it for $200,000, and you know that the repair cost would be $50,000, so you can spend a total of $250,000 and know that you're going to have a home worth $400,000. 203K loan is it's a good tool. It's a good tool to use. It's just a little more difficult than the other loans, but hey, that's what we do. I fit your need. So, and then I'm going to touch on what is Fannie Mae and Freddie Mac. Fannie Mae is the FNMA, and Freddie Mac is FHLMC. They are essentially the same types of investors in mortgages. So we got Fannie Mae, we got Freddie Mac for the conventional loans. We got Ginnie Mae for what we call government loans, federal FHA loans, VA loans, USDA loans. So those are Ginnie Mae. Fannie Mae and Freddie Mac they are the providers of all conventional mortgages throughout the land. So there's not a significant difference between Fannie Mae and Freddie Mac, but sometimes some underwritings, like for example, sometimes we can get approval through the automated underwriting system with Freddie Mac that we cannot get with desktop underwriter or Fannie Mae's. So sometimes we'll maneuver between those two and help the client into the right spot with that. So Dio, am I doing okay with time now? Do you want me to go in depth in anything else or just wait?
Yes, you're doing okay.
Okay, good. All right, so if you guys would like to pop some questions maybe in the chat, I'm going to let DJ Dio, that's what he reminds me of. He reminds me of a DJ with him. It looks like he's doing some stuff. So, and that's a good look for you, Dio. It's a good look. You handle it well.
Yeah. All right.
Dio is always good for the party. Always good for the party. So, Yeah, so if there's anything that you feel like I could touch on at this time, or if you think that someone has any questions, I'm here to help and answer any questions. And I also do have another spiel of something I can go into.
All right. First of all, thank you very much, Jay. I think that was really high level. I already told my wife to unmute. She's going to help with the questions in the chat group. But before we go, I think for those that don't have the video on, thanks for joining everybody again. Asia, Olasumbo, Nife, Ayodeji. It feels like David is actually preparing for an exam because David has been writing so much notes. I don't know if I'm saying the right person, but yeah, David, you see yourself smiling. He's been writing so much notes like, oh, I need to get all these things in one beat. So that's really good. For most of us, let's take notes. It's time to ask questions. I want to hear from people before my wife reads the Q&A. If you want to ask the questions directly, ask the questions first. Then maybe my wife will read any other questions we have there. So if you have any questions, please, I don't know if I have to unmute people.
Yes, we have a question.
Okay, go ahead. While I
hi.
For Jay. Oh, okay. Yes, yeah. Go ahead.
Yeah, hi. Yeah, hi everyone. Jay, thank you very much. I love when preachers talk. I enjoy preachers talking. So thanks for for the all the information you're giving to us. But I just want to just find out. Okay, the two. I mean, for me, the two. Is it 203K loan is the first time I've seen it or heard of even the escrow repair. But it sounds interesting. If, for example, someone has a second mortgage for a loan, right, and the home is in a bit of a disrepair, but you think you can walk into equity, is there any way a conventional loan can be combined with a 203K loan or an escrow repair loan so that one can use that to sort of prop up the value of the home?
Yes. Okay, so home and then renovating it, or already living in the home?
No, purchasing to renovate it.
Okay.
So
very good.
Yeah, purchasing to renovate.
Okay. So the escrow repair, which is and then have it fixed with some money after closing. Essentially, what happens is either the seller or the home buyer will put money into the escrow account for repairs that happen after closing. On the conventional loan, we do have available home. Oh man, it's been so long since I did one because everybody wants to go to FHA. So we do have something similar to FHA's 203K renovation loan. And so with the convention.
Sorry, Jay, I think I unmute you, Jay. Can you unmute? Sorry, Jay. Sorry, I think I'm
got you. Not a problem, brother.
Yeah, that was so much noise.
Yes, I hear you.
Go ahead, please.
Yes. Okay. So Kes, we can combine the conventional for a renovation loan as well, renovation/repair loan as well. As far as sliding in a second mortgage, we might could do that to avoid the mortgage insurance and PMI. But for the most part, we're going to look at doing one loan. We're going to require a minimum of 5% down between. So if it costs $150,000 to buy the house and we're anticipating $50,000, we got it for the conventional renovation loans.
Okay, thank you.
Yes, sir.
All right. Babe, you can ask the question in the chat, please. Well, let's
have a
question in the chat, please. Let's do the question in the chat first, then we'll move forward from there, please.
Okay.
All right, go ahead, babe.
Okay. We have a question from Dayo Adekoya. He said, expand more on the 203K loan application process, rates, and risk evaluation.
Very good. Okay. So 203K loan application part, the pre-application or the pre-approval part is going to be, we're going to do the same kind of things. We're going to get qualifying income, and we're going to look at the credit history and the debt to income ratios and so forth. So that's the first, and it becomes a different is when the property is viewed by the appraiser goes and sees the property by doing a list of the anticipated repairs and renovations, so that the appraiser can see the property as it is, note and do the appraised value based on after repair value. So what happens is the appraiser sees the property as it sits. They take the information that they gather for that, then they combine the list of renovations, proposed renovations, and then they give us what the home will appraise for after all those repairs are completed. So that's kind of like when, you know, when Diam asked about the application process, that's where I wanted to lean into where it starts getting different. And now to get to the interest rates typically are at least 1/4 of a point higher, sometimes 1/2 point higher than the market rate. So if today's market FHA rate is 2 3/4, the 203K is going to probably cost 3%, 3 to 3.25% at the minimum, depending on the best credit scores. So, you know, just to give you an idea about the rates are a little bit more expensive. As far as the risk evaluation thing goes, it is, let's see what I want to say, tampered down a little bit. So typically with an FHA loan, when someone's buying a home that's just move-in ready and there's no need for repairs or renovations, we are able to get up to that 55% total debt to income ratio. When it comes with as low as a 580 credit score, well, 55% is not going to get this 580 score. 580 score is not going to get 55%. Sorry, but I think you get the gist. And so with a 203K loan, got to have a minimum of a 640 score. And the most debt to income we can have is 50%. So that changes some of the risk for us. Okay.
All right. Next question. Good. All right.
Okay. Yeah. Next question. Can an FHA loan be used for a second home?
Barely, I should say. So, oh, I'm sorry. No, not at all. Not for a second home. Yeah. So for a second home, the only loan, the least amount of money out of pocket is going to be a 10% conventional loan for the second home. Now, if you own a home that has FHA financing on it and you're moving to another location with a job transfer, maybe even if you're inside the same company and you get transferred, or if you get a different job in a different location that exceeds, I believe they have a 100-mile minimum radius for that. You can own the FHA home, the home, and move into the new one is primary residence. So there's, I mean,
Sorry, guys, that is my intent. Can you hear me? Can anybody hear me? I think I lost Jay right there.
yes.
Hello, Jay.
Of it, I was in Maryland, and I'm buying a second home with a VA loan, and this is a lot more. I saw the first one actually because I was upset at some point, and I'm buying a second home with a VA loan. This is a lot more expensive, and I want to get it right. And I didn't get all the details of what you said about, you know, what the benefits, you know, I know that zero down payment and the other benefits like non-payment of insurance, if you have some benefit from the military, you know, I need, you know, do you have a hard copy details you can get across to an email? So, you know, when I'm talking to my lender, I'm talking from an informed position, not just guess talking.
Yes, yes, I'll be happy to help you out with that. I don't know that I have a simplified, like a PDF rundown of it, but I'll see if I can come up with something for you.
If you can, because
Okay.
I'm closing. We're actually building this one, and it's a condo because it's too expensive to buy a house here. So we're building. So we're getting to that stage of the process of the
Right.
house building where we need to talk about and fortunately for me, my credit score is over 800 points. That's
Okay.
over 90 percentile
Yeah.
in the US. So I want to get it right and get the
So let me
more
ask
for
you
my
this.
money.
Let me ask you this, GK. Do you receive any disability from the Veterans
Yes,
Administration?
a little bit above 10%. So I didn't know all that before. And when you go to Google and do these things, it
Oh,
gives you
yeah.
random numbers. You know what I mean?
Yeah, it's too much. It's too much.
Yeah.
Okay,
Yes.
so if you receive more than 10%, well, what state are you buying in?
Ashburn, Virginia.
Virginia. Okay.
Northern, close to Washington, D.C.
Okay. So with you receiving more than 10% disability, you and having an 800 credit score, if you want to buy a home with no money down or very little money out of pocket, that I feel like you are going to land in the best spot using your VA loan because you're not going to have any funding fee. If you have 10% plus disability, there's no funding fee, no matter how many times you've used your VA loan.
So if you can get that copies details to Dio, so it can get to me as soon as possible, because I'm getting to that window that I need to start signing those documents, and I want to have Yeah, thank you. That's all I
You're
got.
very welcome. Okay. Hi, Yemi. You ready? Is there another one?
Yes, I'm ready. Okay. Another question is, I own a rental and a primary residence. How do I go about getting pre-approved for a new loan, in bracket, for a new primary residence? And then another question, which type of loan would be ideal?
For that? Okay. So if we own a rental property, then my first question is going to be, do we show the rental income on the tax returns? Hopefully we do. And so if we have that going, and then we already own our primary residence that we want to maintain, that we want to keep and turn into what we call convert into rental property, then what I'm going to do is what Fannie Mae guidelines allow us to do is to take the market rent that's established by an appraiser and use 75% of that against the current primary residence home that's being converted into rental property. So let's try to make them put this in a real life situation for an example for us. If we the primary residence so as far as the current rental property goes, it is as it is. We have the rental income coming on the tax returns, and we're using that for the qualifying income. And if there's a mortgage monthly payment and there's taxes and insurance due on that one, we apply that taxable rental income against those over there. I'm so sorry. I know this is getting kind of boring. So anyways, point is, we can buy a house using a conventional financing. We can use the rental income on the house that you're converting, and you can put as little as 5% down on the new house that you're wanting to buy using conventional financing. We're not going to be able to use the rental income if we go to an FHA loan to buy the new primary residence, but we still could do it. So, okay.
All right.
Okay.
Good morning. This is Sean from California. I have a quick question.
Yes, sir.
So a couple of years back when we bought our first house, I think we used my wife's name to qualify for the FHA loan at that time. So I think like a year after I added my name to the account as a co-owner, co-signer. So like I'm looking into getting a second home. Is it possible for one of us to like still qualify for an FHA loan? Like if this time around I want to be the one purchasing the house, then adding her on, because she was the originator of the first FHA loan, and I was added onto it about a year after as a co-owner, co-signer. So I don't know if you want to buy another house, if I alone will be able to like qualify for a new FHA loan, or we'll probably have to like, go with a conventional loan.
Right. Okay. So if your name is on title, meaning so you mentioned to me that your wife purchased the home and then maybe sometime later your name was added, most likely to the title portion of it, so that you are a co-owner with her on the property.
Yes.
And at that time you were probably not added to the mortgage necessarily as a co-borrower. Does that sound right? Okay. So when you move to be approved for the home loan that you want to go get as a primary residence, then the taxes, insurance, and homeowners insurance, only those portions, not the principal and interest of the mortgage being paid back, but because you own the real estate, then the liabilities that are not involved with the principal and interest and the mortgage payback, that's the number that's going to be used in your debt to income ratios for the next house. Okay. So if HOA costs $100 a month, if insurance costs $200 a month, and if taxes cost $300 a month, now you're talking about $600 a month will go against your debt to income ratio, because you're an owner of a property that has some cost, some liability attached to it.
Okay, thank you.
You're welcome.
All right, Yemi.
Next.
We still have a few questions, so.
Okay, next question. Can I go on?
Yeah, go ahead, please.
Okay.
Let's wrap it up.
So next question, for someone interested in real estate business and at the same time a first-time home buyer, how complex or how possible will this be in terms of leveraging? Can you differentiate the types of loans to be applied for?
Yes. Okay, great. So David, personally, what I feel like is a good target is to if you want to get into the real estate investment, and it's the first time that you're buying a home, FHA loans will allow a person to buy 1 up to 4 unit properties. So what I'm talking about is, like, for example, a duplex, a triplex, and even up to a quadruplex. So if you can locate and get a price that you can afford with up to a quadruplex, that will be the fastest way to be a first-time home buyer and become a real estate investor in general, is to find a multifamily property that you will live in one of the units. And when you do that, we can use the market rent of the other units to help you qualify for that loan. So that's the best way to do it. If you're going to buy, if you're really wanting to build a real estate business, focus on finding multifamily up to 4 units, and then use FHA financing to buy that with.
All right. Thanks so much, Jay, for that clarification. Does that have any limits in terms of financing?
Yeah, there are limits. Like, for example, so for are you in the Atlanta market? What market are you in?
Can you say that again?
Yeah,
Yes.
which market are you in?
So I'm actually a first home buyer. Okay, I don't
What
own
city?
any.
What city or state would you be?
I live in Maryland.
Maryland. Okay.
Yeah, Maryland.
So
Yeah.
what I'm going to do is I'm going to type in Google FHA loan limits 2020. I'm going to look up the state of Maryland, and then pick a county.
Montgomery County.
Montgomery.
Montgomery. Yeah.
All righty. So when I type that into the search, so Washington, Arlington, Alexandria, DC, VA. So for single family, for one family, your loan limit is $822,000. For a two family, it goes up to $1,053,000. For a triplex, $1,200,000. And for a 4-unit property, $1.5 million. So those are the loan limits, and those will continually increase annually. So each year I go into Google and I do that search.
Thanks so much, Jay.
Yes.
All right, Jay, let me quickly ask you a question. I'm not sure if this has been asked when I timed out. Can a non-resident purchase a property in US? Has that been addressed?
Yes, they can buy a home. Obtaining financing is the, let's call it the tricky part. So if they have enough money, if there are enough funds that can be, used to buy the home, a non-resident can own real estate in the United States. To obtain financing for it, you're most likely going to want to have a U.S. issued social security number, and then file U.S. tax returns and have U.S. credit history. There are some programs available for what we in the industry call foreign nationals. So that's typically going to require probably a minimum of a 25 to 30% down payment. And so it is possible to do it. It's not easy for the financing part of it. To buy the property should be relatively easy. That, documentation for who the person is, and then the closing attorney. Like, for example, here in Georgia, a closing attorney has to oversee the transfer of ownership. They would, receive what they would need to for documentation of this person is who they say they are, and when they sign these documents, I verify that, I check that. So, but yes, that can happen.
All right. Before we go forward, this bit. Also, what documents do you need to get a FHA to get a loan, either FHA or VA?
Okay.
What are the common documents that you need to put together?
Yes.
Basically?
Love it. So, okay. So let me just give you my pattern. Hi, this is Jay. You want to buy a house? Yes. Awesome. Let me get you a few questions about your work history and how much qualifying income I think I can get information for. So if a person, and then, okay, we're gonna pass that, get through that gate. I'm gonna pull a credit report, and then I'm gonna send an email. And then that email is gonna have a list of, please send me a picture of your driver's license, 2 recent pay stubs, W-2s, and the most recently filed tax returns. And then if you've got it, 1 month's bank statement, so that we can we can have a conversation about where the money's going to come from to buy the home. So to give you another quick brief rundown on that, we're going to need driver's license, we're going to need W-2s, we're going to look for the most recently filed tax returns, and a bank statement.
All right, thank you very much.
Yes.
All right. Yeah, me. Okay.
Quick question. Quick question.
All right, listen, go ahead. Yeah.
So he said something about the bank statement. Is there a minimum amount? Okay, apart from you already know the minimum down payment at 3.5. Should it be there for a certain amount of time, or?
Yes, great question. Yes, I'm so glad you asked that. So here's the short version of that. If I can obtain automated underwriting system approval, which is like 95% of the loans that we're closing, we're using automated underwriting system approval. And if we're using FHA automated underwriting system approval, We only have to season the documents for 30 days before closing. So for example, if we have green money saved up at home, if we got cash money that's saved up and we're going to deposit into an account, or if we're going to receive money from other sources like a gift, and we don't, if we receive a gift, then I've got to get a copy of the donor's bank statement, but not if it's in the bank for 30 days or more by the time we close. So I believe the short answer for you is we're going to want to see it seasoned for 30 days. And we can go ahead and get a contract on a house while that 30 days is going on for us.
Thank you.
All right. Do we have more questions, Yemi?
I have
Yes.
one more question. Go ahead, please.
All right. Okay, please ask your questions. I want us to wrap up in 2 minutes.
Yeah, so I think it was 2 weeks ago, I was speaking to Dayo about going into real estate investment next year. And I asked him about setting up a company, and I want to actually put money down, cash, to go into the real estate investment. But my issue is I've already got into the tax bracket where I have to pay money back to the government every year. So is it possible for me to use cash to start the company and move it into the real estate company for tax purposes?
That's a good question. I have been trained to answer that question with, I am not a tax professional. So with that being said, yes, if you purchase a home using, and you don't need financing, like from me, a traditional lender that does long-term financing with 15 plus 10, 15, 20 years of financing, you can own that home in any type of entity that you own, that you possess, like LLC, partnerships, limited partnerships, things like that. Yeah, so buying it with cash enables you to take advantage of any tax structure that you want to. Refer to your CPA for more information.
All right, that is the part I like most, Jay. Refer to your CPA. All right, Yemi. Any other questions? Let's wrap.
Yes, we do have other questions, but
I have a question.
It's
can you hold on, please? Let Yemi go ahead, please.
Yes, so the question I have here is similar to the question that you asked about a non-resident purchasing a property in the US. But I see another person asking, so Israel and Gloria asking similar question, but I'm going to throw it out there. So it says, what is the residency status requirement for both FHA and conventional loan? Can you get both loans while on a visa status, or do you have to be a US citizen or permanent green card holder? And in addition to that, the Gloria's question is, do you have to be a US citizen for USDA loan? So in other words, they're asking for USDA loan, FHA, and conventional loan. Do you have to be a permanent green card holder or US citizen?
Okay, awesome. So essentially what we're looking for is if you can work in the US legally, if you have work authorization, then essentially we can do a mortgage. So if we're here on a travel visa, we won't be able to get financing. If we're here on a work visa, then I've only had 1 or 2 people that I've done mortgages for with work visas that we weren't able to complete the transaction because their employer, for whatever reason, wasn't willing to put on paper, yes, we're going to renew the next time this comes, we're going to renew as his visa expires. So short answer is if we're working here in the US legally, then you can use any of the loan programs that I've talked about today.
All right, Yemi, any more questions?
Yes.
Yeah, Yemi, I have one question on hard cash.
Okay.
So I asked, Jay, you've been in the industry for very many years. So the question generally is there under any circumstances where you would recommend using hard cash for investment, hard cash
Yes.
loaners?
Oh yeah. Hard money loans, hard cash loans. When a real estate investor knows that when they finish this property, there is going to be a significant amount of equity. I would say, maybe percentage wise, a minimum of a 20% equity after all costs are involved, including the cost of the loan. Generally speaking, my gut tells me if I can get 20% when it's below $200,000, if it's above 200,000, then maybe we start talking about the dollar amounts of equity, because $40,000 equity in a house is $40,000 equity, whether it's a $400,000 house or a $160,000 house. But $160,000 house with less than 10% equity and 20% equity in that's when I start going, I don't know. So that's my gut.
All right, thank you. Sorry, before we go forward, I'm going to let Yemi run through our questions, maybe 3 more. Then I'm going to leave the floor open for another 3 questions so that we can wrap up. I want to make sure that in interest of time, it's probably 9 p.m. in Nigeria, and I'm sure people have other things to do, so I don't want to make it too long. So Yemi, can you please go through 2 or 3 questions that you have, then we'll throw the floor open for 3 more questions and we'll wrap up. All right.
Okay. First question, what is the most favorable loan for investment purposes?
Got it. Conventional. That's trying to think if there are any situations that I can wrap my brain around with it. So the only way that you can use FHA for an investment is with a multifamily, so that you're going to live in one of the units. So conventional financing with a 20% down payment is the least expensive way to get into owning investment property and using long-term financing for it.
All right, thank you. Next question.
Okay, next question. Next question from Israel. Is it true that there is a new conventional loan requirement that prevents mortgage company from doing small loan amounts because the cost of doing such loan is too high per loan amount?
Yes, that's true. That's accurate. So because essentially the restrictions on the percentage that can be charged, so essentially some of the rules are like for example, a maximum of 9% of the total loan amount or $1,000, whatever, whichever is the highest. So like, for example, if 9% of the loan, if it's a $30,000 loan, and no, that would be $2,700. But yes, essentially there are some guidelines, and it does make it more difficult for lenders like myself to even offer the financing because of the guidelines that surround the maximum allowable charges. And the reason for that is because there are fixed costs involved with a mortgage. So like no matter what, it's going to cost $500 for processing. It's going to cost $795 for underwriting. It's going to cost $450 for an appraisal. Those are like fixed costs. They're not percentages based on whether the house is $500,000 or $25,000. So that's what makes it a little more difficult.
All right.
I have a question for Kes. Has your question been answered about the hard cash?
Yes, it has been answered. Yes.
Okay.
Yes, it does.
Okay. All right. So next question from Niye Funto. What are the current refinance rates for conventional loans on investment property?
That's a good question. When I say it's a good question, what I mean is that it's gonna move on us because of credit scores and loan to value and loan amount size. So basically, just to give you something to chew on or something to think about, somewhere between 3% and 4% is probably where we're going to land in today's mortgage market.
So following up on that question, Jay, quickly, if it was an FHA loan with a credit score of 650, and let's say you have everything, what is the interest rate you'll be looking at in today's market?
Probably 2 3/4.
All right, cool.
2.75%. Yeah.
Average. Okay.
Yeah.
All right, Yemi, let's have 2 more
Okay.
questions and we throw it open. We spent 1 hour 30 minutes already.
Okay. Okay. So there's this question I asked earlier from Obaro. He asked about owning a rental and a primary residence and how to go about getting approved for a new loan, like for a new primary residence. So he has a follow-up question. He's saying that what if the goal is to sell the primary residence but keep the other rental residence?
Okay, yeah, perfect. So if we already own a rental property and we're using the tax return, that verification of that rental income, then we're going to sell our current home and use that equity most likely to buy the new home. You can use conventional financing, but to get into this other one, if you don't already have an FHA loan, you can absolutely use FHA financing to get into the new house. I think that might be where we're headed. I think that might be what the question is at.
Okay. Next one. Somebody, Galaxy Note 10, saying that says, I'm a Nigerian and I would like to get a house here.
Right.
That's
a good question. Yeah. Depending on what state you want to buy the property in, you would want to probably just want to like Google closing attorney in whatever city that you're looking to buy in, and let that closing attorney also. So we got 2 synonymous names: closing attorneys and escrow agents. So do a Google search for closing attorney, escrow agents in the city, at least the state that you know you want to be in, and let that person guide you on how you can buy a home without a social security number. They may say that you can't, but it's definitely worth trying.
All right. Thank you, Yemi. Thank you very much, Jay. We still have more questions?
Yeah.
We have more questions, Yemi?
Yeah. So in addition to that question, Sandra might be able to help.
Yes.
So that Nigerian that would like to get a house here, I'm going to drop Sandra's email in the chat box, and so you can reach out to her if you need any further help. Yeah, we still have a few questions, but
yeah, so we will not be able to answer all the questions, to be honest, and that is why I think it's to my screen. That's why I have Jay's information right there. I'm going to put it out there for 1 or 2 more questions from everybody. But Jay, you need to help answer this question. Is Jay's service limited to any jurisdiction? Are you only a Georgia loan officer, or do you work internationally and do you service US?
I am licensed in Georgia, Florida, Alabama, and South Carolina.
When are you going to go 50 states? I think that's what we want.
To Texas?
No, 50 states.
Yeah.
You know, 50 states. I think that would be of good value to everybody. If you can be licensed everywhere, right?
Yes, yeah, that would be good, but yeah, it's hard. In my opinion, stretching too much sometimes it limits overwhelming, I suppose. I love being a blessing to the people that I can be a blessing to.
All right, cool. If you have a question, please let's make it open.
Yeah.
Ask 1 or 2 questions.
Yeah, I have one question.
Okay.
Yeah, just one question. So maybe you answered this already, but I've been in and out. So just a quick one for folks with joint tax returns. Can they both get FHA individually?
Yes.
Okay. All right. Awesome. Thanks. Thank you.
Yes, sir.
All right. Next question, please.
Dio, please, can you share Jay's details?
This is Jay.
Yes,
You see Jay's
I
detail on
will.
the screen? And Jay can put it in the chat group.
And,
too.
and it's also in the chat.
Yep. All right. Next question. Let's move fast. Any other question?
And Sandra just posted her information for to help with the foreign nationals.
Okay, good. Awesome.
Yeah.
If your question has not been answered in the group, in the chat, you can ask for questions now so we can wrap it up. All right. One last question.
Okay.
Okay. In the interest of time, I will assume no more questions. I'm going to ask the last question.
Oh, yeah, I have a question.
Okay, all right, shoot.
Hello?
All right, go ahead, please.
Okay.
No more questions.
Yeah.
Okay,
Let's
question,
do Dio. Dio,
Okay. All right. Yeah, thanks, Jay, for making out time on your weekend to really dive into this. My question is I have two different questions. One is, do you have any resources you can share with us about if I'm interested in the USDA loan? How do I verify the property I'm looking at if it falls under rural development?
Yes.
Do you have any link that we can
Absolutely.
share? And the second question is, if I have a good relationship with the bank in my state, can they fund out-of-state properties?
It's going to depend on the bank. It's going to vary from one bank and one lender to another. So yeah, you have to ask them that. So if you would like, Dio, if you have Adakaya, if you have my email address, you're welcome to email. Well, I can tell you briefly. I mean, you can also email me. So essentially what I do to look up where USDA property eligibility is, I go to Google, I type in USDA property eligibility, gives me a link to a site. The site says, do you agree? Yes, I agree. And then I type in whatever street address I might be looking for that might be in the general vicinity. And then it will show me the lines for USDA.
Awesome. Thanks for sharing.
Yes.
All right, thank you, everybody. I really need to wrap up. Wait, one question again? Go ahead.
Can I share one more, please?
Okay, go ahead.
Because I heard
Yes,
a voice of Rock Paint and I stopped on her. So
yes.
the question is, how do non-resident benefit from the loan provision? Oh, non-resident, okay.
How do non-resident, that is people not living in the US, right?
Yeah, so so we have two ways to look at that. If we're speaking of foreign nationals obtaining financing for properties in the US, it's a difficult task. It could happen, but like I said, based in my world, minimum of a 25 to 30% down payment. If we're talking about folks that are non-citizens, maybe non-resident, but we have a work visa, then we can pretty much do any of these products for you. If it's a travel visa, if you're here on a passport, not going to be able to buy with less than 25 to 30% down.
Thank you, Jay. So we actually have one more on the chat, and that's it. Yeah, so I just feel like, why not just take off, because it's just one more I see here. So from the Akinros, if you already own a residential property, can you still use FHA for a rental property? If yes,
No.
Is there a time limit to apply for FHA loan for different properties? And is there a limit to how many times you can use FHA?
Okay, so FHA loan is only going to work for a primary residence. If we currently own a home and we're going to move into another home, we can use FHA to buy the new home that we're going to move into if we don't already have FHA on the current home. So is there a time limit? No. It's like if we currently own a home that has FHA financing on it, and we're going to buy a home, and if we're going to own the home and we're going to sell it and buy the next home on the same day, for example, you can do FHA financing on the new house. And then is there a number of uses? No, there's no limit to uses that you can do that throughout your lifetime.
All right. Well, thank you very much. I think it's been an engaging section. I wish I could call everybody's name out, but it's been great to have everybody. Let me share one last question so that we can move forward. All right. Should I buy mortgage points? So I'm going to let Jay answer that question at the end. Should I buy mortgage points? Let's vote on that, and we'll wrap all the questions out.
All right, let's wrap it up with a money question. That's a good one.
Show me the money.
That's right,
Hold on,
man.
Jay,
That's
hold on,
right.
Jay. Let's get the answer.
Okay.
Let's get the answer in. Let's
Okay.
We have 1 minute to decide. We have a lot of, I see the marker is moving left to right. Should I buy mortgage points? I mean, what is it with mortgage points anyway?
Yeah.
So maybe I should start, what is mortgage?
Okay.
Then what is points?
Excellent.
We got 20 minutes
That's
left.
right.
20
That's
minutes
right.
left.
Okay. All righty. So tell me when you're ready.
All right, give it 10 seconds. We'll be out. 10 seconds. We need more people to vote. Should I buy mortgage points? Yes, no. What is mortgage points anyway? Let's wrap it up. All right, all right. Let me know what you think about mortgage points. Should I buy mortgage points? All right, cool.
Yes.
So, Jay, what is the answer?
There it is. Love it. All right. Yes, and that's exactly what I would think. That I mean, because based on my experience doing mortgages, if you know what a mortgage point is, okay, so check this out. If a person walks up to the cashier and the cashier says, "Oh, you're buying a TV. Would you like a 2-year warranty for this?" And it costs $25. Some of us say yes, and some of us say no. And whatever reasoning that we have for that is completely understandable for either answer. Should I buy mortgage points, yes or no? It depends on you and your gut and what you feel like you're going to do with this home. If you're going to be in the home for more than, typically it works out to about 60 to 80 payments, which is like 5 to 7 years. So if we know we're going to stay in this house with this mortgage and probably not refinance and probably not sell for more than 5 to 7 years, then we consider that to buy points, because the math works out such that not buying points. Okay, I'm giving the answer about yes or no first, and then I'll get to what it is. So yes or no depends on the dollars. If I get my calculator out and figure it out, the yes or no answer is how long are you going to stay in the house? How long do you know that you're going to stay in the house and you know you're not going to refinance? Boils down to that. What is a mortgage point? Mortgage discount points, also known aka discount points. It's essentially prepaid interest. You're paying interest up front to get a cheaper locked in term loan rate. So if, for example, if today's FHA rate was 2.75%, you could potentially pay one discount point or one mortgage point, which is 1% of the loan. And in our scenarios that I've been using all day, $200,000, that would be an extra $2,000 closing costs. So if closing costs were going to be $5,000 and you choose to pay 1% discount to get it down to 2.5% interest rate, then you're going to pay an extra $2,000 in closing costs. So it's all about weighing out how much it costs extra and how much you save per month and whether or not that equals out over time.
All right. Well, if you need more information, Jay's information is there, and you can also ask me. I can help you. I'm just kidding. I'm just an engineer. All right. Well, thank you very much, everybody. This has been great. I'm going to stop sharing. Just to wrap up, I think this has been a great section. I'm going to hand over to my wife so she can wrap it up with us. All right, Dave.
Okay, thank you so much, everyone. I just wanted to say that if for any reason you would like to watch this session over again or you missed some parts, this webinar has been recorded and it's going to be posted on our YouTube channel. If you check the chat now, you will see our YouTube name. Just click on that, search for that, and you should see us. I'm also going to send the link in a moment. And so you should expect it to be there before the end of today. Okay, so it will be uploaded. And also, if you'd like to join our mailing list, please let us know. Get your emails sent to us. I'll share our email address so you can send your emails to us. That way, whenever we have the next session coming up, you can get calendar invite, get all the details soon enough. And last slide, please. Yeah, we also, we are on other social media platforms like Facebook, Instagram, Twitter, LinkedIn, and I also mentioned YouTube earlier. If you look at the screen share, you will see our names on there. Most times, okay, Blooming Edge Group, Blooming Edge Group. You can also visit our website at www.bloomingedge.com. So I hope that everyone has had value for their time, and we want to thank you so much for joining us today. We've not fixed a time for when the next session is going to be. So basically today, Jay talked about conventional loans, and we also have non-conventional loans to discuss in upcoming sessions. So, but we'll reach out to you when the time comes, and that's why it's important to share your email so that you can get informed when the time comes. So that's it for us. Thank you so much, and we hope to see you next time. Thank you.
Thank you.
All right. Thank you very much, everybody. Thank you, Jay.
Thanks, Dio. Thanks, Jay, for your time.
I appreciate your time. Have a wonderful weekend.
Thank you.
All right. Bye.
You too.
Thank you, Dio. Thank you, Yemi. Well done, guys.
Thank you for the session.
Thanks, Yemi.
Thank you.
Bye. Mr. David,
Thanks, guys.
thank
Bye-bye.
you.
Thanks so much.
Gonna share our
Thank you. Thank you, Dio. Thank you, Yemi.
Thank you.
You're welcome, everybody.
Thank you, guys. Appreciate it. Thanks for the knowledge.
You're welcome. Thank you.
Thanks, Dio. Thanks, Yemi C. Thanks, Jay.
Sandra, thank you. So I just shared our email, support@bloomingedge.com. You can send your email addresses to that email so you can join our mailing list through that. And I also shared our YouTube link. Thank you.